Benchmark, the voice of business. Presented by LMD.
On this edition of Benchmark, trade and commerce is the topic under discussion as we welcome to our studio Subhashini Abeysinghe, Senior Economic Analyst of Verite Research. Next, LMD columnist and market analyst HAsitha Premaratne discusses market sentiment. And Kiran H.N, Country Manager of TNS Lanka, wraps up this edition of Benchmark with his analysis of TNS's survey on the cost of living. That's the lineup for Benchmark.
Hello and welcome to Benchmark. I am Savitri Rodrigo. This is the Big Picture Business Program, and today trade and commerce is the focus and in our spotlight today, in particular our export industries. Here in our studios to give us her views is the Senior Economic Analyst at Verite Research, Subhashini Abeysinghe. Good to have you on the show, Subhashini. Thank you very much for agreeing to share your views with us. Now, could you give me just a very brief outline of Sri Lanka's export trade situation? What is it like at present?
Yes, the sad situation of the export product sector in Sri Lanka is that our world market share in exports has been steadily declining. We anyway have been having a small market share of like less than 1% for quite a long time, but even that is declining. And then our exports to GDP ratio from about 2000 to 2012 has sharply declined from about 33% to 14%. And even last year, from about May 2011 to May 2012 to about May 2013, we even had negative growth. That means our exports have been declining, not only as a percentage, but even in terms of absolute value. So this is, and our growth has been very slow compared to rest of the emerging market economies. And we have a problem because we have a huge trade deficit, especially our trade deficit ballooned in 2011. It was twice our exports, the imports. So, and as a percentage of GDP, it hovers around 15 to 16% of GDP, which is very large. So we have to work on our export side, because otherwise you have your balance of payment, your external account having issues. So, but right now the exports, you don't see this vibrant dynamic growth, and you don't see from where it is going to come. That is the current situation.
You know, regarding the import situation, Subhashini, weren't there some remedial measures put in place in 2012?
Yes, the problem with remedial measures is Sri Lankan economy is dependent on imports, especially our fuel bill. It's about good 20-25% our imports is oil. And with the current, our power to energy to transport, everything is dependent on oil, sadly. So we need to import, and also most of our export industries, even the raw materials we import, and all our machinery, technology, we are import dependent. So as a result, being a country that is import dependent, when you curtail imports, it definitely affects your production and affect your economic growth. So it's good to curtail imports. What you say is unnecessary or luxurious. There may be certain space to reduce imports, but if you actually press too much, it definitely will have a negative impact on growth. And it is already visible in 2012 and 2013. The growth has collapsed, and partly it can be attributed to us trying to curtail imports in order to curtail the trade deficit. So the right path that should be rather to encourage exports.
You know, Subhashini, looking at product base, we also need human resources to support that product base. Are we doing enough to build skill, knowledge, capacity, competency in our human resources?
That is the greatest challenge that Sri Lanka needs to address. We have not looked at the importance of human resources, and also we have not realized industries like apparel or tea or spices depend on low-skilled, low-end, low-cost labor. when countries move from low-income economies to middle-income economies, labor is not your strength. It is the low-income economies that actually compete better in labor-intensive industries. In the 70s, 80s, we would have done well in these industries, but today, Sri Lankan labor force, we are not, just like when incomes grow, also Sri Lanka is exceptional in that way. Our growth in labor force is still very low compared to most developing country standards. That means we anyway have a small or shrinking labor force, soon to shrink labor force, aging population. So that means labor is not our strength, and any industry that has a huge labor component cannot be a leading sector in future in Sri Lanka. That means we need to move, we need to gradually shift to technology, skill-intensive industries and services. So that means we need our education. We need to fix that. We really, really need to fix that. Without fixing education, you can't think of a vibrant industrial or service sector or a vibrant export sector.
We've talked a lot about, or at least the country talks a lot about the upliftment and development of the hospitality, the tourism and leisure sector. But really, given the product we have, which is absolutely unique, probably the most unique in the world, are we really making the most of what we have to offer?
Again, I think from planning to implementation, the stakeholders, this is the situation not only in tourism, even in most sectors, seem to have divergent views and divergent opinions on what to do and how it should be done. There is always drama around even deciding simple thing like your branding campaign and your destination marketing. So everything, there is lot of, among the private sector stakeholders, you see a lot of fragmentation and lack of unity and different opinions on what should be done. And then sadly these sectors are have very strong hold by the government, having a ministry, having a tourism development authority, being a leading provider of skills. Government has a huge role to play, which in contrast is not the same if you take a situation like apparel or ITBPO, which has done well. They do not have this kind of government deciding what they should to be. So it is relatively easier for the sector to say this is what we want to do and then get support from the government. Now when you take to tourism, the sad situation is you have a huge government stakeholder, huge government institutional framework governing these sectors, and private sector need to also fall in line with what they think. So that makes it worse sadly for tourism sector, because industry can't on their own also take it forward. So again, the problem is lack of consensus, lack of open debate. It's okay to argue, but at the end of the day, all the stakeholders have to agree this is what we want to do and move in this direction. That is what is lacking. When people, in any situation, when people pull at different directions, you can't move forward. That's a problem.
Well, we're going to continue this discussion, but first, a short commercial break. When we get back on the other side, Subhashini Abeysinghe discusses gives her expert views on regional trade agreements as well as Sri Lanka's prospective FTA with China. Stay with us.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC.
your mind of stress and worry with a Shanti Home Loan from HNB. Shanti Home Loans from HNB. Peace of mind with the house you have in mind.
Welcome to Benchmark. In our studios today and speaking with us in our second half of Benchmark is the Senior Economic Analyst at Verite Research, Subhashini Abeysinghe. So we are back to that very sort of the million-dollar question of how we're going to improve our export industries. Subhashini, in terms of the services sector as a whole, which areas do you think have the most potential as export centers in Sri Lanka?
Actually, I think Sri Lanka is well positioned, especially in terms of tourism and the logistics and maritime services. See, when a country is in a conflict situation, obviously both these sectors could not live up to their potential. You are endowed with the natural advantage in terms of location, in terms of resources, and you only need to basically thrive by making sure you have the right infrastructure, technology and skills and the proper institutional framework. And when you have a natural advantage, it is not easy for another country to replicate the same. So that is the success for the tourism and the maritime and logistics sector. So I see maritime and logistics sector having a lot of potential, but what we need to realize is, yes, we are very well geographically positioned. We have now done massive investments in infrastructure, but we have huge competition in the region. There are a lot of other ports that have had a long period to develop themselves during the time Sri Lanka was going through a conflict period. So as a result, we have very, very severe competition. So that is something we need to be mindful of. So if you want to be a thriving maritime and logistics hub, the only way you can do it is by having the best of technology, the best of skills, and best of institutions and regulations.
Sri Lanka signed an FTA with India in 2005, then by virtue of being a member of SAARC, we are also privy to the SAARC FTA, which was signed in 2006. Subhashini, are we really, do these FTAs actually work in our favor, and are we maximizing on what those FTAs can give us?
We have two problems with the FTAs. One is FTAs themselves have a lot of shortcomings and weaknesses. The second is in terms of exportable products, we are also constrained. So it's a dual problem, it's not just a one problem.
But is this a problem that only we are facing, or is it sort of common to all?
Weaknesses in FTAs, I think every FTA has weaknesses because these are politically, although you call them free trade agreements, no FTA in the world actually is a completely free trade agreement. European Union or the North American free trade agreements are at one extreme where they are actually much more liberalized than any other FTA. And then you come to ASEAN, which is not as good as Europe and NAFTA, but better than the rest. And then you come to South Asia. Sadly, South Asian FTAs tend to be weaker in terms of giving market access and being open to trade than the rest of the world. So it's definitely South Asian region, even India has a problem. The free trade agreements are very politically sensitive agreements. You always have a domestic industry lobby against liberalization because no industry wants to lose their market share or increase competition. That is, from industry perspective, that is their interest. So then every country has lobbies. Today you discuss in India when they sign these agreements, there's huge lobby against it. But what we need to realize is we need to put national interest first. Sometimes individual domestic industry interests may be of interest to those particular industries, but not necessarily for the country as a whole. So that is where the government comes in. So the government has to sometimes make tough decisions and tough calls and say, look, we can't sacrifice the overall good for the country for just 1 or 2 or 3 business people's interest, right? So these are tough decisions every country has to make when they negotiate free trade agreements. If you can't make these decisions, then to me, entering into a free trade agreement itself is not going to get your benefits, because it's an exchange agreement. The amount of your liberalization is what determines the amount of liberalization your partner country is going to offer. We always call about, okay, India is a large country, so they should give us more access. But trade agreements are not charity agreements. They are pure commercial agreements. There is a political dimension to it. So either you must be politically important or economically important. Otherwise, it's very difficult. So in that sense, our trade agreements sadly have the product scope is narrow. Sometimes the market access barriers have not been successfully removed, and the scope definitely, because our agreements are only goods. We do not think of liberalizing any other sector. Services especially has received a lot of negative feedback in the context of liberalizing with India. So again, that's an area we need to clearly think of how we are going to move forward. The current position doesn't look very optimistic.
If that's the case, what about the prospective free trade agreement with China? Are we selling our soul?
China definitely is a very important market to be in, because they are the largest, second largest importer in the world and the largest exporter in the world. So it is a market in Asia that Sri Lanka definitely should be in. Whether FTA is going to help us, whether barriers, what a trade agreement does is they remove the barriers for your trade. So is it the barriers that prevent us from exporting, or is it our own supply side constraints that are preventing us from exporting? Because China relatively has very low tariffs, because China entered the World Trade Organization quite late. So as a result, China had to actually liberalize the economy a lot to get agreement from the other countries to allow China to become a WTO member. So as a result, tariff is not a huge bottleneck in China. So non-tariff barriers. Sri Lanka's current agreement do not have sufficient clauses and rules on non-tariff barriers. So if we are talking about non-tariff barriers, then we need to really seriously think how we can incorporate clauses to address non-tariff barriers into the agreement. And also we need to carefully analyze free trade agreements of China that is already in place. So all these factors, again, you may have perfect free trade offered by China, because after all, China is a huge market, and even if we export everything to China, China might not feel it, right? But what are we going to export? That is the second question we need to ask. If apparel, tea, rubber products and spices is 75% of our exports, is that what we are looking at? Are we signing free trade agreements for these 5 or 6 sectors?
Well, Subhashini, thank you very much. We do hope that good sense will prevail sooner rather than later. So we've been chatting with Subhashini Abeysinghe, who's the Senior Economic Analyst at Verite Research, on the status of Sri Lanka's exports. On the other side, we have HAsitha Premaratne, Market Analyst and LMD columnist, who will give you an update on the Colombo BOURSE, and Kiran H.N, Country Manager of TNS Lanka, speaks to you on the latest of the survey.
Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC. Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC.
Free your mind of stress and worry with a Shanti Home Loan from HNB. Shanti Home Loans from HNB. Peace of mind with the house you have in mind.
Hello and welcome back to Benchmark. I'm Anushan Selvaraja. In early February, the ASPI halted its forward momentum. So to find out how this would affect or how investors would see this, joining us today is market analyst and LMD columnist HAsitha Premaratne. Now, HAsitha, as I said, the ASPI halted its forward momentum. Now, what are the key areas that investors are concerned about?
Yes, so I think when the market took a bit of a positive run towards early 2014, we saw very clearly there was, on one side, there was a lot of enthusiasm and optimism coming in, and on the other side, always the investors had some concern and they were skeptical about the sustainable improvement that you could see in the index. Now, looking at where the overall situation has behaved in the last couple of weeks or so, there have been a lot of debates at a macro level on certain concerning issues. Like, for example, if you look at the UNHCR matter, there is a bit of a concern among the investors on where the vote would be and whether there will be any economic implications as a result of that, which I don't see it as a major issue or any major economic concerns coming after this month. But having said that, investors did have some concern on that side. Plus, also globally, there were a few other issues pertaining to especially the last few days on Russia's and tensions in Ukraine. So essentially, these macro level developments also have some sort of impact on the market's behavior and the overall investor confidence. Plus, I think from a economy point of view locally, we have seen very clearly the economy showing signs on selected areas for improvement. Still, the retail side and the overall consumption level improvement is not to be seen at the level one would expect. So that's a big factor that boosts the investor confidence, because investors, when they see that the consumption is increasing significantly, I think then naturally you will see that the people get more confident and start maybe even looking at investing as well, because you may expect the companies to do well in that kind of economic environment. So these factors have had a impact towards the upward momentum of the BOURSE in the last maybe 2 to 3 weeks.
What are the trends in corporate earnings that you see, HAsitha?
Yes, now if you look at the last year, 2013, we saw the first half showing some negative signs from a corporate earnings growth point of view, especially driven by selected sectors. Banks didn't come out too well. Because there were some provisioning required related to the gold prices coming down, and also we had the oil palms, which plays a big role, like the Carsons, the Bukit Daras, which are heavy market cap companies, not delivering as per expectations, and obviously having very low profit numbers. So as a result, the first half looked quite bleak, and that had an impact on the overall context of 2013 earning growth. But towards the latter part of the year, and even the results that we are seeing today, which is more related to the fourth quarter of 2013 calendar year, we've seen improvements coming in quite dramatically, and some of those concerning sectors have shown some recovery, while other selected companies also have shown positive results. So overall, 2013, the second half has seen a clear improvement compared to the first half. So that's good news. And then from a future point of view, I think 2014 we should see further improvements in the corporate earnings, though you might not see a massive jump, I think we can expect really something around the 10% to 15% range.
Now the PE ratio or the price earnings ratio has dropped. If you don't take the fall in the ASPI, what other factors could have led to this?
Yes, naturally the price earnings ratio is determined mainly by two broad factors. One is the movement in the index and the other one is the movement in the corporate earnings. So surely the earnings side, as you said, the index did come down a little bit, so that had an impact towards PE ratio coming down. But more than that, I think what is important to note, like what I said earlier, the second half of the last calendar year, 2013 calendar year, we saw improvement in the corporate earnings, and the numbers that are reflecting today in the corporate earnings are the fourth quarter 2013 numbers, which seem to be pretty good. So when those improved corporate earnings come in, the market PE comes down, unless of course the index does outperform the earnings growth. So here what I've seen that the index also has taken a bit of a beating, and with the corporate earnings improving, the overall price earnings ratio has shown some improvement. So that's on one side a good sign. If there are bargain hunters who are ready to take a bit of a risk on the macro environment and take selected positions, you may find attractive valuations to enter into the market.
That was market analyst and LMD columnist HAsitha Premaratne. After a short commercial break, we will take the public's pulse on the cost of living. Stay tuned.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC.
Free your mind of stress and worry with a Shanti Home Loan from HNB. Shanti Home Loans from HNB. Peace of mind with the house you have in mind.
Hello and welcome back to Benchmark. I'm Anushan Selvaraja. The cost of living, a hot topic for the entire country at this point of time. So to shed some light, we have with us the country manager of TNS Lanka, Kiran H.N. Now, Kiran, tell us a little bit more about the LMB TNS survey which you all just did.
Yeah, as you mentioned, it is a hot topic of in recent times. Everyone is talking about it nowadays. So we asked the general public what they think about it, how they are coping with it, and I must tell you the findings, if not surprising, definitely alarming.
So what did you find out, Kiran? What did the respondents have to say about the cost of living?
Anushan, we asked a simple question to our respondents. Do you think the cost of living in this country is reasonable? And not surprisingly, 88% of our respondents, which is almost 9 out of 10 people, believe that it is too high. Cost of living is definitely not reasonable. Okay. And conversely, only 1 out of 10 coming from youth, affluent people, Colombo, believe that cost of living seems okay. So coming back on this point about why why they think cost of living is so high. It's not based on any inflation data. In fact, on the contrary, almost 60% either don't agree that the official inflation data doesn't accurately reflect cost of living, or they don't know what to make of it. So this opinion is coming mainly from a simple aspect of daily life. I see prices of goods and services going up on a daily basis or on regular intervals at least. Definitely the price of essential commodities, there are hikes taken on a very regular basis, and I'm finding it very difficult to make ends meet.
Now, on the lines of what you said in terms of making ends meet, are wage levels keeping in line with the cost of living?
That's the other side of the story, Anushan. So while on one hand people believe cost of living is on the rise and it's definitely going up, on the other hand almost 70% of our respondents felt that the salary levels are not going in line with this. So the others 30% are also not sure, and only 1 out of 10 believe that salary is going up in line with cost of living. And we asked why they think so, and you get several opinions. So those aside, one very interesting observation from the general public, coming from a small but significant number of people, is that the government salary seems to be going up, whereas the salaries of those working in the private sector, and these are the companies which are finding it difficult to sustain their business and growth. So people working in the private sector, they find their salaries not growing in line with cost of living. So it's like a double whammy of sort for the common man.
That was the country manager of TNS Lanka, Kiran H.N. Thank you for watching Benchmark, and we hope to see you again next time.